Good morning, everybody. Welcome to today's Crystal webinar. Today, I'm delighted to be talking real life lending with Richard Angell, National Account Manager from the mortgage lender. Morning, Richard.
Good morning, Kris. Thanks for having me here today.
No problem, absolute pleasure. So schools are back, the roads seem busier, the sun's out. It almost feels like things are getting back to normal.
It does, doesn't it? It's this weather has kind of taken us by surprise. We're strolling into September, and all of a sudden, that big orange ball has appeared in the sky. So, yeah, let's keep our fingers crossed that we've got a bit of normality ahead of us.
That's it. I think that's what we all need at the moment.
Absolutely.
So to start us off with, then, can you just tell us a little bit about the mortgage lender for those that maybe not as familiar with the company?
Yeah, of course. So we're an independent lender, and we're funded and backed by Shawbrook Bank. And we operate at the heart of what some people call the specialist mortgage market. The thing is, we actually don't think specialist mortgages is really us, to be honest. We prefer to describe as what we do as real life lending. So everything we do is to provide mortgages for people who've got less than usual lifestyles, and that's residential and buy-to-let lending.
Okay, very interesting viewpoint there. And can you give us a little bit about your background?
Crikey, how much time have we got, Kris? I feel like we've joined one of those dating programs on the TV. You know, tell us a little bit about yourself. I was going to do
next webinar.
Yeah, I was going to do a Cilla Black analogy, but most of the audience wouldn't know who Cilla Black is. So I've been in the industry for some time. I'm a national account manager for TML, and I look after our specialist distributor relationships. And of course, Crystal Mortgages being one of our key relationships. And that means that my role is to work with you and to help you educate and place business with your brokers for clients that don't meet the normal. I've worked for a number of specialist lenders, including bridging lenders and also mainstream lenders. And I've also crossed the fence as well. I've been a broker in the past. I've worked for packagers and also master brokers. So, you know, I've had a taste of both sides of the fence, if that makes sense. A taste of both sides of the fence. I've never heard that expression before, but we'll roll with it, Kris, if that's all right.
Yeah, we'll take it. We know what you mean. So obviously one of the big drivers for our conversation today, the mortgage lender have recently revamped their product range. Can you tell us a little bit about the drivers behind that?
Yeah, of course. So there are 4 pillars to our lending, okay? There's buy-to-let, self-employed, complex income, and impaired credit. We've made a number of changes recently to our buy-to-let range. So, for example, we've moved into the holiday and short-term let part of the market. Now, this is a part of the market that is growing hugely. I mean, that word staycation, we hadn't heard of it, had we, this time last year, but it's become more and more popular. For us, what that part of the market means is more than just buying a holiday home. It's about short-term lets. So it can be the classic Airbnb, the booking.com. For us, it means that the property could be in Bournemouth, it could be in Bolton, Birmingham, or name any other town or city beginning with a B in the United Kingdom. And it gives people an opportunity to perhaps move into a part of the market where they've already gained experience of running a buy-to-let, and they want to expand into an area of the market that is perceived as being, you know, full of opportunities and full of growth. It's proved to be very, very popular for us. We've also moved into other areas of the market as well. Expat was something that we moved into last year, and despite Brexit, that has proved to be a very popular product range for us to have. And, you know, we're happy to help expat clients who are looking for buy-to-let properties within the UK, and we're able to assist them with that. On the flip side, with regards to residential, about half of our business for residential is for self-employed clients. Now, we've recently conducted some research amongst self-employed people and tried to get some feedback as to how they feel about their situation and how they feel about things with regards to mortgages. And it's been quite interesting, the analysis that we've had. There's a large number of people that feel, is self-employment for them? Should they perhaps be looking at returning to the employed world? There's a lot of people there that are saying, are they going to struggle with getting a mortgage? And also a number of self-employed people are saying that they've increased their debt during the lockdown, which is understandable. But we can go through the detail a little bit more later, but certainly self-employed is an area that we're very strong in, and we certainly see a lot of business for those clients.
Okay. Excellent. And obviously you recently increased the LTVs on your products as well.
Yes, we have. So we've gone back to 80% on buy-to-let, which is great news. And it's good to see that there are a number of lenders that are returning to that higher LTV banding on the buy-to-let. That's proved to be very, very popular. So we're back at 80, and that's for purchase and remortgage. We also reintroduced our lower value loans. So our loans now on buy-to-let start at 25,001. And, there still remains some great opportunities to purchase lower value properties where the yields are very strong. And certainly what we're seeing is a definite uptick in demand for clients who are looking to purchase in the Northeast, the Northwest, the Southwest and South Wales. And yeah, the return of both of those things has proved to be very, very popular.
There was an interesting phrase that you used earlier as well, where it's not so much specialist, but it's real life. And I think one of the things that stands out about your product range is the similarities between that and the mainstream. So a lot of the specialist lenders approach it from almost a commercial viewpoint at times, whereas there'll be a lot of things in your product guide that most of the brokers on the call today will be familiar with, things like no application fees, cashback, free legals, that kind of thing. So that seems to be a common thread throughout all of your products.
Absolutely. I mean, as I've said, we don't like to refer to us as offering specialist mortgages. What we're here for is real life lending. Now, real life can mean so many different things. On the residential side of things, it could mean that you are a contractor, for instance. You may not have any impaired credit, but you could struggle to actually get your mortgage from the high street. And the same with self-employed. When we look at a self-employed applicant, and in particular a limited company self-employed applicant, we will take the latest year's figure only. We will work on their share of profit before corporation tax, not after. So that's giving the applicant, a step up there in terms of affordability. Plus, we will take their salary as well. So on an affordability basis, we're a great lender for those self-employed clients. And, it's regardless of whether the client has some credit impairment or whether they have a clean credit profile, we have the same criteria for both on self-employed.
Okay. Yeah, very interesting. So where do you think TML set themselves apart from others in this space?
That's a really good question. There's an awful lot of competition, as you know yourself, Kris, with the sheer number of lenders that are in the specialist mortgage space. It's about how do you make yourself different to the competition. And the key things with us are that, we're not a tick box lender. We will look at a case on its individual merits. Now, whether that's a situation where an applicant is looking at doing buy-to-let with us and has a portfolio, or whether they're looking to do something like a MUB property that's a little bit different, or whether they're looking to do a holiday let, and even extends onto the residential. We see a lot of cases come through where there's a complexity of income. It's not all about that's the amount that somebody earns. Their income could be derived from a number of sources. Yeah, of course, it could be commission, bonus, overtime. Those are taken as read. But we're seeing a lot of people that have got a second job. We're seeing people that have got a buy-to-let or two in the background. So yes, we can take those incomes. And then of course, we look at benefit income as well. So where we stand out is that we believe that we do different. We actually bring something different to real life lending, and we're able to help an awful lot of applicants. Now, whether that's through our core range or whether it's through our Lumi range, which is a package exclusive that only you guys and our packager partners are able to access, where we're able to look at, you know, other credit impairments, other issues. You know, the applicant may have a payday loan, for instance, and that's where working with Crystal is great news for the broker and the client, because there's a number of things that come into play there, Kris. You know, we have the product exclusivity that a broker cannot get from us direct. We also have within that, you know, some of those other angles that are not within our core range. And we also have a specialist underwriting team. So they work with your underwriters directly alongside our portfolio underwriters if it's a buy-to-let, and they're there to provide a great service to you, the broker, and the client. So it's about us working together to provide, you know, the best possible thing for the client.
When a broker comes to one of your packages, obviously Crystal being one of them, they're getting an exclusive product range. They're getting access to underwriters from there. And what does that bring to the mortgage lender from working with packages?
Well, I think what it brings to us is that it brings a lot of insight to us. So it's something that we talk to you guys frequently, and we're finding out all the time, what sort of inquiries are you getting? What is proving problematic for brokers to be able to place? And because you have such a wide span of inquiries, we're able to see where things are, sort of where there's any hotspots and where we need to perhaps look at things. That's where the Lumi range came from. You know, after talking to our packager partners and listening to their feedback and seeing the business that was coming through, we were seeing that there was an opportunity to help those clients that had perhaps, you know, taken out a payday loan and may have defaulted on it, or it may have been conducted satisfactorily, but they weren't able to access rates and products with a lender. So that's where Lumi came from. And we're listening to you guys all the time, whether that's on our residential or on our buy-to-let range.
Okay. Yeah, it's good to hear. And this conversation that we're having today, this webinar, is all about real life lending. So what we're really interested in is some cases that some of the attendees have got, some challenges that you're facing with your clients. So at the bottom of your screen, there's a Q&A button. So please use that, pop any questions, any scenarios that you've got in there, and Richard will do his very best to answer those live. If there's anything that's not specifically TML, then I'll do my best to pick that up, but you will get an answer to all of the questions either here or offline. So please put your questions in there, and we will do our best to answer them in the session this morning.
Yeah, be more than delighted to answer them. That's what we're here for. We want to pick up in real time any queries, any questions you've got on cases that you may be struggling with to place at the moment that could be sat on your desk. And, you know, working with Crystal, we'll do our best to find a solution for you today. Excellent.
And you can see product guides on websites. That's almost a given. That's part of the reason we haven't just done a kind of a generic presentation on this chat today. You can go in and get the product guide. This is more about scenarios. This is about things that don't necessarily appear in a product guide, or that little quirk that you want to bounce off someone. So we've had a number of questions that have been pre-registered. So thank you to everyone that's put those through. And I can see now we've got questions flying through on the chat as well. So again, thank you to everyone that's put those on there. Please put more on. Again, we will do our very best to answer them for you. So we've had a pre-registered question come in, looking for your view on buy-to-let purchases of properties that need minor refurb works. Apparently it was something that was relatively common previously, but now it's something that's becoming much more difficult with mainstream lenders. Is this something that you're looking at TML?
What a good question. So yes, certainly post-pandemic, from our perspective, we don't offer a refurb product. However, I'm picking up lots of feedback from Crystal and our other packager partners around refurb projects. And it doesn't necessarily need to be a big project. It could just be, you know, a new bathroom, a tidy up of the kitchen, and some decorative work. Now, whether those would be an out and out refurb is another matter. It would come down to the valuer's comments ultimately. We don't actually have currently a refurb product. However, depending on the amount of work involved, we would be happy with a situation whereby if you needed to arrange bridging, for example, and our good friends at Crystal could organise that, we would have no problem in you bridging the purchase, doing the work, and then refinancing to us within 6 months of the original purchase price. Now, that may be one way of dealing with those sort of situations. And certainly when we're asked for refinances, we are able to consider them within 6 months of the original purchase. And that would be where the property was bought on a bridge, where it's purchased for cash, or if the property was inherited. So if it's one of those three things, we're able to assist within 6 months of purchase. And as I said, if it needs more than just decorating and a bit more work, perhaps a bridge may be an option, in which case I'm sure that Crystal will be more than happy to step in and help out there. Yeah,
bridging is something that we love at Crystal. It's something that we've done for a number of years, and we like to think we're pretty good at it. The key there is the amount of work, as Richard said, that needs to be done. What we tend to find is that borrowers are very good at kind of underselling the amount of work that needs to be done in order to access the cheaper rates and the better products. It's all about working with that borrower closely to ensure that we're actually getting the most suitable solution for them. We had a scenario where we had a client brought to us, it's probably back in March of this year, and it was a deal that we'd actually seen at the back end of last year and we'd sourced a development project for. It was a client that was gutting a pub, turning it into 2 apartments. Really nice project. It would have gone really well. Development finance quote was provided. The broker managed to obtain a bridging finance quote from someone else. By the amount of work that needed to be done was probably a little bit undersold on there. Bridging lender completed the deal. The client had the first release. They bought the property. They started doing the work, and they ran out of cash. Went back to the bridging lender to get the second release of funds, and the property had actually decreased in value because of the amount of work that she'd done. She'd removed the floors, she'd taken the cellar out. So basically, when you went in, there was no bottom to the property. You went through the front door and it dropped all the way down into the old cellar. So the valuer actually took off, I think it was about 50 grand of the value of the property. So the bridging lender looked at that and said, well, there's no equity there for us to lend anymore. Actually, now we're overexposed on this project than we were previously. So it's all about getting the right product at the start. And if that is a bridging product, there are some excellent bridging rates out there. What we're looking at now in the market, rates of 0.43 and upwards for bridging lenders that will look at that. And then lenders like TML, as Richard mentioned, will take these deals out within 6 months. So you don't have to wait 6 months now to do that and get it done. It's all about getting the right product to suit what that client's looking to do.
Absolutely. I think that shows the value, Kris, of, if as an intermediary, I'm doing a lot of mainstream business and then I'm presented with this opportunity by a client, it shows the value of talking to you guys, because you've got such a vast experience and skill set in dealing with this sort of business. You're going to be able to place that deal, and it's going to be right first time. So you won't then run into that situation, obviously hoping, fingers crossed, that the client then doesn't just tear it all down in the meantime. But you're then in a situation where they're dealing with you, you're experts, the right solution first time, and it's going to be more cost effective for the client, because I guess for them now, they've got a property that's not worth anywhere near what it could be. They've run out of cash, and that's unless they've got a portfolio that they can raise against, that's a very tricky problem for them to handle, isn't it?
It is, and for the lender that lent on it too, because they're now in the negative equity situation with no other lender that will take that deal out. So it's really important that both the brokers that are working with the clients and us as packages, that we're understanding the deal correctly and that we're placing it in the right place to begin with. Otherwise, anyone can write a bridge. It's a common phrase. It's about getting that deal repaid and getting the client onto a more mainstream product, and that's the key there. It's about picking that right product to move forward.
Absolutely, yeah. As you say, the exit is king, isn't it? That's crucial. You need to make sure that bridging is a great product, but let's get you onto a term deal as soon as we can, and live happily ever after.
Exactly that. We've had another question come in about limited companies. Lots of lenders are happy to lend to SPVs. Why are lenders reluctant to lend to trading limited companies?
So from our perspective, we will lend to an individual, we'll lend to an SPV. We wouldn't necessarily rule out lending to a trading company. If we can see that there is a connection between that trading company and property and finance, then we'll be comfortable with it. So, you know, the classic example would be somebody that is a builder, perhaps, who's done a number of properties like this in the past. It could be a letting agent that is looking to do something. We just need to make sure that they've got the correct SIT codes in place. And if it's for a holiday or short-term let, we actually have a couple of other SIT codes that we put in place for those as well. So for us, it's about understanding the applicant. You know, if you came to us as a first-time landlord and you wanted to do a buy-to-let through a trading company, the reality is that's not going to work with us, and I don't think it would work with many lenders. But I'm sure Kris will have a solution somewhere in his vast armory of lenders. But it wouldn't work for TML. If, however, you were a first-time landlord and you had an SPV, then yeah, that would work for us. So it's about looking at these cases on an individual basis and understanding the client and how they operate. Have they got experience of doing this? If they have, then yeah, that's something we would be looking to consider and take forward.
Okay, thank you. We've had a number of questions coming in live at the moment. So talking about the short-term options, short-term ownership, that kind of thing. I had a question in from Stephen saying he's looking at a remortgage for a new build purchased in cash in June of this year. The owner has never owned a main residence and doesn't own any other buy-to-lets. So technically speaking, would be looked at as a first-time buyer. However, obviously we've got this buy-to-let that's been owned for the last 3 months. How would you view that?
So for us, so we don't have a residential mortgage in the background. We
No.
don't have any other buy-to-lets in the background. We've got this new build that he's owned for 3 months. For us, on something like that, we would be looking for them to have at least a mortgage in the background, whether it's a resi or a buy-to-let. And for us, that wouldn't fit in terms of that very short-term ownership. We would be looking for them to have at least a mortgage in the background. But hey, I'm turning into a walking advertisement for Crystal here, Kris, aren't I? But I'm pretty sure you guys would have a solution somewhere.
Yeah, we would have a couple of lenders that would look at that scenario in that we can have a look at there, so we can pick that one up with you offline, Stephen, afterwards.
Don't name them. We'll make them pay to come on. All
right. So with the minimum time in ownership, how long would you need that mortgage to have been there for before you'd be able to consider that scenario?
So for us, if we're talking buy-to-let, okay, as we've mentioned, if the applicant has got another property in the background and they want to remortgage another property, we can do day one. But the caveat is they need to have another mortgage in the background. Whether that's resi or buy-to-let, it doesn't matter. But providing they've got that in the background, we could do a day one remo. So they may have purchased something at auction and they want to remortgage it immediately. We'd be happy with that. No problem.
Excellent. Thank you. Question from Claire. Will you lend to applicants who have pre-settled status? And if so, what's the maximum lend? And would you accept gifted deposit? So probably a threefold question there.
Wow, there's a lot of combinations there, Claire. Wow. So we've got pre-settled status and we've got gifted deposit, and there was another point as well.
There was. What would be the maximum lend at that point?
Okay, so from our perspective, we would need that applicant to have full rights to reside. I presume we're talking about a residential, not a buy-to-let here. So if that was the case, the applicant would need to have full rights to reside. If they had that, would we accept a gifted deposit? The answer to that question is yes, provided that gift of deposit is coming from family. So, you know, the logical mum, dad, grandparents, sisters, brothers, etc. I'm guessing that deposit may come in from outside of the UK. That would be my guess. Could we help in that situation? Yes, we can consider those. We just need to follow the money, if that makes sense, Kris. You know, we need to see
Yeah.
the audit trail. So where did this money originate from? And is the money in the UK? Where is it? So providing we're clear on that, then that's something we can consider.
Excellent, thank you. Yeah, the pre-settle status obviously does lead on into, or sorry, should lead on into citizenship or full rights to reside afterwards. But I think during that pre-settled element, there's a lot of lenders that would struggle at that point because technically there's no guarantee that the client could remain beyond that point.
Absolutely, absolutely. And that's kind of where we are. The client is in that in-between moment currently. But to say, if they had full settled status, if I could say that, would be great, then we're able to consider that for the client.
Excellent. I hope that covers your question there, Claire. Mark has asked a question on how you view seasonal income or 0 hours contracts.
Okay. Wow, you guys are throwing them at me this morning, aren't you? You're not
Yeah.
holding back.
No, keep them coming, everyone. This is good.
So when it comes to a 0 hours contract, I mean, typically we see these in retail. Now we're okay with 0 hours contracts. We just need to see that the applicant has worked on that basis for at least a couple of years. So provided that's the case, we're good to go. With regards to seasonal income, that can be a bit more difficult, especially with the impact of COVID, because a lot of that seasonal work hasn't been happening as frequently as it used to. So for us, that would be a question of, have you got a pay slip for it? Can we see the money going into the account? Have you done this before? Now, if the answer to those questions are yes, then it's one we can consider taking forward. If, however, it's, well, I've just started this and it's my first time, that would be a no for us. But it's something we can consider. I'm not going to say I'm sure you would have other lenders who could help in situations like this, Kris. It's going to sound corny otherwise, isn't it?
Yeah, that's the benefit of using a package, of the fact that, you know, we're talking today about the mortgage lender and their product range. We work with, I think it's 82 lenders at the moment across different product avenues, bridging, buy-to-let, commercial, residential, etc. So we like to think there's a home for most things. Now, whether or not it's the LTV that the client wants or whether it's the rate that the client wants is a different thing altogether. But we do have access to lenders that will consider most scenarios. So, you know, never think anything's too complicated or too unusual. You know, please contact us and talk through anything like that. We'll be more than happy to help out.
Yeah. Or ask us today on the live question. Ask us on the live question. Let's see if we can find that really challenging one.
Yeah, this is supposed to be to challenge you, Richard, not for me. So just following on from Mark's question, then talking about seasonal income or 0 hours, how would you view things like bonuses and things like that?
So the complexity of income is something that's becoming more and more frequent. And from our perspective, currently, we can accept half of any commission, bonus, or overtime. When it comes to any regional allowances or car allowances, we'll accept 100% of that. We can also accept some elements of universal credit, and that would be up to a maximum of 25% of the applicant's earned income, and they need to have a minimum earned income of 15,000. One area that we are seeing quite a surprising upturn in inquiries on is those applicants who are looking to do a residential mortgage, and they seem to be struggling to be able to use their rental income from their buy-to-let. Now, whether that's an individual property or portfolio, we will accept 50% of that rental income. And we've seen quite a few inquiries coming through on that basis, and we've been able to assist a lot of clients who've been looking at residential purchases or remortgages, and then using an element over here of their rental incomes. But certainly, you know, the whole issue around the complexity of income is something that we're working on all the time, and we keep a very close eye on it in terms of where our proposition sits compared to the rest of the market.
Okay. A couple of questions have come in from Ian. First of all, when a case is discussed with you, is that discussed with the decision maker?
Yes. So what would happen in this instance, Ian, is that your first port of call would be to Crystal. Now, you'll be speaking to Toby and his team in terms of being able to place those inquiries. Now, they have direct access to our underwriters. So that means that those underwriters will be able to discuss and agree a case, whether it's a residential, whether it's a buy-to-let, or if it's something that's a bit more complex and it's perhaps a portfolio, we will then bring our portfolio team into play. So the team at Crystal have direct access into the underwriters. And as I mentioned at the very outset, we have a specialist underwriting team that's in place just to deal with business from our packager partners. So they're used to perhaps the more complex and more complicated inquiries that we may see through sort of the traditional channel, so to speak.
Excellent. Great answer. Thank you. And follow-up question from Ian. What's your oldest agent application and then term to lend?
That's a great question, Ian. Thank you for that. I'm trying to think off the top of my head. I think max age on residential is 85. Max age on buy-to-let is 95. And I'm desperately trying to remember what the entry age is. What I'm going to have to do is come back and confirm that with Kris. But there you go, Ian. Well done. You got me there.
Excellent. So you 95 on buy-to-let?
Yes.
At the end of the term.
Yes, so that would be at the end of the term. So that would be our max age. It's quite interesting. We very rarely see people at sort of in their 70s and 80s coming to us for buy-to-let. Now, whether that's something that's happening in the market, I'm seeing a lot more inquiries for younger people. I'm seeing more inquiries that are coming through at the moment where people are setting up an SPV and where they've got a tiered owner structure. So, for example, SPV has been created. There are 4 shareholders within the SPV. Mum and dad own 75% of the shares, and then they allocate 25% of the shares to children. I'm seeing a lot of inquiries like that. Now, clearly, children can't go on the mortgage, but we will accept that structure with regards to our SPV applications. I presume that what's happened there is that the applicant has taken advice with regards to inheritance tax planning, and they've made a conscious effort to go down that route. Now, we're not tax advisors. We're not advising that that's a good way to do it. You need to take advice, but there's a niche there that we are seeing an awful lot of at the moment.
And that's something that a broker can add real value to the borrower for. A client can go direct to a number of lenders and access Virgin, BM, etc. buy-to-let, so the standard vanilla range, if you like. But when it comes to the complexities, when it comes to future planning, when it comes to estate planning, when it comes to incorporation, that's where a broker can really add value to that client. And as Richard said, we're not tax advisors, we're not telling clients what they should be doing, but we can point them in the right direction, and then we can facilitate that transaction for them from there.
Yeah, absolutely. And you know what, if you're working alongside, or you're able to refer to an accountant, a tax advisor, then you're able to provide a holistic approach to your client. And the client is going to value that advice that you've given, and they're more likely to want to refer their friends and family to you and come back to you themselves for future funding requirements. Something that we're seeing at the moment is a lot of activity around buy-to-let and refinancing. If you go back to the summer of 2016, that was when the first 5-year fixed rates came out on buy-to-let. So it comes as no surprise that there's more activity currently around PTs, there's more activity around refinancing. And people are looking at some perhaps do improvements to their property to improve the EPC rating on their buy-to-let, for instance, and there'll be a benefit to them. So those sort of clients where you engage with them and provide that holistic service, they're more likely to want to come back to you even after 5 years, and in the meantime hopefully refer other people across to you.
Yeah, I think that's a really good point about PTs as well. Something that's been in the press recently about the reliance from the mortgage market on that product transfer business. And with buy-to-let, there aren't many lenders in the specialty space that do typical product transfers per se. But where the value can be added is what's changed, how is the business model changed, what's the client looking to do now? Because it could then be, you could be looking to pull deposits out, you could be gearing up on properties, doing the opposite, paying them down, and maybe getting your portfolio debt free. So at that point, it's a real good opportunity to check in with those borrowers, see how that business plan's changed. You know, as Richard pointed out, are they now looking at inheritance tax issues? Are they now looking at future estate planning? And is that something that we need to look at for the portfolio again from there? And what starts off with one property could quite quickly grow into 3, 4, 5, maybe even more. And again, with the holiday let boom, it's not a huge leap for a buy-to-let landlord to go into holiday lets. Again, some of the returns on those are particularly strong. You know, we've done a lot of work recently on self-employed, on semi-commercial borrowing, a flat above a shop, where the flat's kind of what's attracted the investor, but the retail unit on the ground floor is kind of a nice to have on top. And again, it's just a nice way to expand on that portfolio, maybe diversify some of that income a little bit.
Yes, yeah, absolutely. And, you know, from our perspective, you know, there are lots of inquiries that we take in. You know, we are able to consider flats above our shop, above shops ourselves. You know, I think it's a minimum of 150,000. The kind of the caveats around that are what's in that retail space. So if it's a hot food outlet, it's not for us, but anything else, we're good to go, and we're able to consider those sort of inquiries, and we see a fair number of them coming to us every day.
So following on from that then, which areas are you seeing the most growth currently?
We're seeing a lot of growth in the minimum loan size, so those smaller value loans, as I mentioned earlier, primarily because with the lower value loan properties and the lower price properties, sorry, there is an opportunity for the rental yields to be higher. So we're seeing a lot of growth in that currently. We are seeing a lot of growth as well with regards to the 80%, having moved from 75 back up to 80. And bearing in mind that for us, even at our max LTV, we will always add the completion fee over and above the max LTV. And we won't take the completion fee into account for the rental assessment. That means that an applicant is able to max, you know, within reason, a fairly decent amount. And we're seeing a lot from there currently. We're also seeing, in terms of different things, multi-unit blocks. We see a number of those coming in each day, where investors are taking a view and looking at MUBs as being a great opportunity for them to be able to really grow their portfolio. So I would say it's probably those three areas. On the residential side, it's certainly the self-employed. You know, we're becoming a lender that has built a fantastic reputation for being able to help self-employed clients, whether they are near misses on the mainstream, on the high street, or further down the credit curve, so to speak.
And rate-wise, the rates that people think about for specialist lending, where are you on rates? 3s, 4s? It's somewhere around there, isn't it? On the product guides.
And I think the crucial thing here is, you know, I'm not going to say that rates don't matter, because rates do matter. You know, for every bit you save is more money for the applicant, and you know, benefits them. So in terms of rates, you know, we're starting off at the very low 3s on our resi and our buy-to-let ranges. We are constantly looking at our pricing, and when we look at the cost over the product term, we are sourcing very, very favourably, certainly on the resi and certainly on the buy-to-let side of things as well. But it's more than just cost that's important. You know, there is the service, there's the fact that, you know, you're able to get that case through and with the as frictionless as possible, you know, by introducing Crystal into the equation. Because of your experience, you're able to make that a very smooth process. There are other factors there. You know, the maximum loan that you're able to get on buy-to-let, we're at 125 and 140, depending on whether you're a lower or a higher rate taxpayer. So, you know, we're able to consider, you know, the maximum loan for the client. So there's a lot of factors in there, but you know, the real life lending aspect of what we do is more than just credit impairment, is more than just self-employed, is more than just buy-to-let. it's a combination of everything, and we're looking to help as many people as we can in our part of the market.
Excellent. And another question coming from Mark, talking exactly down those lines. Do you accept foster income, as it doesn't show on SA 302s?
The answer to that question is yes, we do accept foster income, Mark. So what we would do in that situation is we would engage with Crystal on this case, and we would talk to them about the client's experience, how long they've been doing it, and we would then ask to see proof of that income. Now, that should be going through their bank accounts. Now, when we pull a 3-month bank account trail, from a lender's perspective, what we're looking for is we're making sure that, yeah, is the salary stated, is that being paid in? And we can see the payments going in for foster care, for example. So, yes, that's something that we're able to help with.
Excellent. Great example of real life lending. Literally came in as we were talking about it as well. So thank you for that, Mark.
I'd like to think so, yeah.
So with the market's been almost artificial over the last 9 months or so, with stamp duty deadlines and incentives here, there and everywhere. With all of that coming to an end at the end of September, do you think it's still a good time for first-time investors potentially to enter the buy-to-let sector?
Absolutely. It's quite interesting insofar as that anecdotally what we were hearing was that the serious investors were holding off until the end of the stamp duty holiday. And their view was that the gain of not having to pay as much stamp duty wasn't enough, with the prices of properties having risen, as you say, artificially. If I knew what was going to happen to the property market, I'll be honest with you, Kris, I wouldn't be sat here. I would have made my billions, wouldn't I? And I'd be on a desert island somewhere. But certainly it feels like it's a good time. We are seeing lots of inquiries for people that are either first-time landlords or experienced landlords. And it just comes down to the same thing. You know, does that buy-to-let fit? Do the figures work for you? You know, on your first one, are you going to be a bit more prudent, and you're going to need to do your homework and make sure it fits? Do the figures work for you? If they do, then great, crack on and let's get going. Excellent.
We've certainly seen demand for properties. Britain's still got a housing shortage. That's common knowledge. So people still need places to live. Whether people are making changes as a result of the last 12 months. Again, anecdotally, there's talk of people wanting more space. There's people wanting gardens. There's maybe the work from home changes, meaning people don't have to live in city centre areas now as they did previously. So that opens up opportunities. But it's still very early days, isn't it? It's still an artificial market with the stamp duty period. We're still looking at historic transactions and how things are going. So I think it's just a case of watch this space and wait and see.
Absolutely, and that's why our short-term lending product has proved to be so successful, because it's not just there for holiday homes. You know, it's available for Airbnb. So those people that are thinking, do you know what, I actually don't mind sort of a commute in and perhaps stay over a night a week in an Airbnb, but I can live in another part of the country, which is ideal, in the countryside, near the sea, etc. So we're seeing a lot of demand for our short-term lending product, specifically, not just for holiday let, but short-term let. So yeah, I can see that's why.
So picking up on that then, would you allow a client to maybe remortgage their residential onto that to go off and buy somewhere else? So the property they're in at the moment, converting to an Airbnb if it's city centre based, for example, whilst they buy elsewhere?
So from our perspective, there would be an element of consumer buy-to-let within that. So the rules would be that, from our perspective, if they have another buy-to-let already, then the answer would be yes. Okay. If they don't have a buy-to-let already, we would be unable to assist unless they were to put that into an SPV structure. And of course, we then come back to whether that's suitable and whether that would be a correct route for them to go down. And they'd obviously need to take advice for that.
Okay, thank you.
Okay.
And something that you touched on a little bit earlier, you recently released an article about the pessimism from self-employed borrowers when it comes to getting a mortgage. Can you tell us a little bit more about what you're doing to assist those people in particular?
So certainly, for a self-employed applicant, they've worked through a pandemic, and we've seen lots of situations where some people have survived, and bizarrely, some people have actually thrived. Now, from our perspective, we will not discount anybody from certain sectors in taking a mortgage with us just because they work in hospitality, retail, or leisure. So we're able to assist self-employed applicants, whatever the sector that they're in. And we also help the non-traditional self-employed roles. So for us, it's about understanding their situation. So we will look at the last 3 months' pay slips. And if we can see that this is a business that has recovered and is back to its pre-pandemic trading, then great. There obviously raises a question then about those people that have not been able to return to their pre-pandemic levels. And that's something that we are looking at. We're considering our options there. But certainly, because we're not a tick box lender, because you're able to speak to our underwriters directly, we understand the case. And it's about understanding the applicant, understanding the business, what's the cash flow situation, what's the turnover, are we able to help this client? The last thing we want to do is to put somebody in a situation whereby they're unable to pay. We will work with you and we will identify those clients that can help. And certainly we've been helping an awful lot of self-employed clients lately.
Thank you for that. So anyone that's worked in the buy-to-let space over the last few months will understand that service levels have taken a little bit of a battering across the market over the recent months. How are things looking at TML?
So from a broker's perspective, I always think it's really important to find out where a lender is at with their service. And we are completely transparent on this. We publish every single day on our website our SLAs. Go on to themortgagelender.com. There's a blue tab on the right-hand side that's marked service levels, and you just slide that across. And that will tell you how quickly we're answering the phone, how quickly we're turning around DIP referrals, how quickly we're actioning our post, and how quickly we're getting our cases to offer. Now, we, like every lender out there, has had challenges because we're based in Glasgow and we've not had our staff back in the office. That is starting to happen. So our staff have been working remotely. However, we've maintained a really good service to our intermediaries during this time. And certainly from our perspective, we will continue to offer the best possible service that we can. It is difficult because when you're working remotely, it's a totally different situation to, everybody's in the office and you're able to bounce ideas off everybody. But from our perspective, we've been fine. We've actually done some things this year with regards to product and criteria where we've eased back slightly in order to manage the service and provide the best possible service to our intermediary partners. So for us, it's good. But you can check at any time, any day on our website what our current service levels are.
That transparency is key, isn't it? Because when you're as customer-facing brokers, you're recommending a lender, you're recommending a product. If that client's got a deadline, you need to be confident that that lender can work with your deadlines. There aren't many lenders that have that level of transparency on there, so that's very commendable.
Yeah, absolutely. And it's that balance, isn't it? You have to pick and choose your lenders based on a whole raft of things. Of course, rate is absolutely important to the client, but is the client going to thank you if you're some way down the track and they haven't got their offer, or are they going to be more forgiving? Despite, you could sit there with your client right at the outset and say, this is the best rate possible, but it could take some time. Just remember that. And then you get 57 phone calls a day from the client asking where their offer is after 3 days. So as an intermediary, it's very important for you to manage that situation. So yeah, check out service levels, check out, do your due diligence on your lenders. Where are they in terms of rate? Where are they in terms of criteria? And where are they in terms of service? Really important.
And that's something that the team at Crystal can help out with as well, because the very opening part of a transaction for us isn't a fact find, or it isn't what kind of rate are you looking for. It's tell me about the deal. It's tell me what are the drivers for your client. Is it rate that's important? Is it timescales? Is it certainty? Is it, is there some complexity in the background that we need to be aware of? So we want that warts and all conversation as early as possible, with all cards on the table, and we can all work together then to get that best outcome for the client.
Absolutely, I can wholeheartedly recommend that. And from a lender perspective, it's a little bit like when you're asked to provide bank statements to a lender, and a lot of people kind of get quite nervous at this point when they're having to divulge their 3-month spending history. What we're interested in is, how have you conducted the account? So if you've got an overdraft, are you operating within it? Does your salary match the amount being paid in? We're not really concerned whether you're ordering a mochaccino every day or a latte. It doesn't really matter. What's important is, how are you conducting that account? Because for us, that's a real-time snapshot of the applicant and gives us a real insight. It shows how they're able to manage their money. It shows their ability to be able to save if they need to. As I say, we're not going to make a judgment based on the type of coffee you're ordering each day. We're simply just trying to establish, are you living within your means? Can you afford this mortgage? And do other factors stack up as well? The credit's going in, money going out, really straightforward stuff.
Yeah, we had a call from a client a couple of, it was probably about 6 weeks ago now, and they said exactly that. I've been asked to provide bank statements. I'm really nervous about providing them because there might be a bit of gambling on there. Okay, well, how much are we talking about? What happened? And they said, well, it was Cheltenham, and I put £50 into a Sky Bet account and just played with that for the week. Right, okay. So is it every week are you spending £50? What's happening? No, just a one-off. Just put it into just for Cheltenham. That's fine. Well, are you overdrawn? Nope. Have you had any bounce direct debits? No. Well, it shouldn't be a problem. People don't have to be nervous about providing information.
Absolutely. As you say, and that's a great example, Kris, isn't it? It's not as if that person is earning £1,200 a month net and they're gambling £900 a month,
We've seen that too, by the way, but that's different.
Yeah. So it's not as if it's that. Somebody there said, like, this is what I've done. That's absolutely fine. That's not going to be an issue for us as a lender. They haven't got an addiction problem. It's not out of control, and they sound more cautious than anyone else. They know their limits, don't they? So that wouldn't present us as a lender with an issue.
No, it's the pub brokers, isn't it? Where, Fred in the pubs told me that he had a problem, so therefore I'm going to have a problem.
Oh, absolutely. And the thing is as well is that they're great because they are the best mechanics for cars on the planet as well. They've got the best political insight, and it's amazing how they're able to do all that without any knowledge, experience or qualifications. Yeah.
Actually, that's triggered a question in from Richard. How about a professional gambler based on the SA 302 income?
Wow. Not actually been asked whether we would be able to consider a professional gambler before. I would need to know more about that applicant. So I'd need to know more about how long has that been a way of working. The concern would be the losses, but I guess if you're a professional, you're going to be working slightly differently. I'm not going to be the man that sits here and says, yes, we can definitely do that. I'm going to be the man that says, I'd like some more information in order to be able to decide whether or not we can assist in that case.
Yeah, and that's where we'd certainly be happy to help on Richard on collecting that bit of information and working with the lender to get the answers. We do have lenders that will consider unusual occupations, professional gamblers, sports people, that kind of thing, where the income is a little bit less reliable. But again, as our Richard on here said, it's about sustainability of that income, and it's about how much can that lender rely on it. So we'll certainly have a look at that for you.
Definitely. Okay.
Excellent. Well, we're just coming to the end of the hour, so thank you to everyone for putting the questions in. It kept us a lot busier. I've got some backup questions on here just in case, and I haven't needed to use any of them. So thank you to everyone for putting your questions in there today. think, Richard, just to finish off then, is there, if you had a crystal ball, where do you see things headed? You know, is it still a good time for brokers to be in this space?
Absolutely. Brokers are busier than ever, aren't they? And there's more demand and more need for intermediaries than there has been for goodness knows how long. I mean, you know, having worked in this industry for more years than I care to mention, and sort of been in the midst of recessions and credit crunches, this has got to be the best time ever. I think there's probably more choice and more opportunity now to help lots. Let's be honest. I would say if you are placing in the main high street cases, and everybody will see a specialist case land on their desk once, twice, 3 times a week, from your perspective, getting involved in that sort of business can be time consuming and prevents you from doing the simple, straightforward stuff. It prevents you from looking at the needs of your client from a protection perspective. Talk to Crystal. Those guys know how to put something together. They know whether something can be achieved or not, and will do it a lot quicker. You know, they can do it very quick. They've got great service, and they've got the flexibility of knowing that they've got a large panel of lenders. Obviously, I want them to send every case to TML, but that can't happen. But certainly, it's a great time to be a broker, and certainly a great time to be working in partnership with Crystal and also TML as well.
Excellent, thank you for that. Keep a lookout for our new Thrive campaign, which we've launched to everyone. So it's looking at mortgage broking in the post-pandemic world. There's a survey link that we've put in the chat, so please click on that and make your views known there. And there is a chance to win a Fitbit Versa 2 smartwatch or one of our new unique quartz crystal gifts through there as well. So what we're trying to do with that is really understand what's happening out there from your viewpoint, and what we need to do in order to help you to thrive. The view that we've taken is we've survived, we've adapted. Now it's time to kick out on the back of that and really make the most of the opportunities that are in front of us. And with the new product tweaks and the information that Richard's provided for you today, then hopefully that will help you when you're sitting with your next client. If you do get that quirky income or that real life scenario that isn't necessarily a computer says no thing, then you know you've got somewhere to go with that, and you can really add value to your client relationship from there. Excellent. So thank you to everyone. Keep an eye out for our next webinar. I'd like to say a huge thank you to Richard for joining me today. Really insightful as always. An absolute pleasure talking to you.
Thank you, Chris. And likewise, thanks for inviting us along today, and hope this has been a useful session for everyone.
Brilliant. Thank you to everyone, and see you again soon.